What's up, guys? It's Rey-Jay back with another video, and in this one I want to break down what's happening with SPY, Tesla, Nvidia, the QQQ, and a couple of other tickers. I'm going to break down what's happening with the economic calendar approaching tomorrow, as we have a very important week ahead of us when it comes to FOMC and big earnings. But just know that I am not a financial planner, so take nothing I say as financial advice whatsoever. And also, if you guys can, please check out my Mumu link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed 30 in total. And the offer ends very soon at the end of March. Anyways, now let's talk about what's happening with the market. Looking at SPY on the daily time frame, there is a possible bearish divergence that could be developing, and there's a possible pivot that could be forming here if we can't break and hold above 610. So if that's the case, we are going to likely come down to fill at least some of these gaps if we end up getting that rejection. I also want to note the market's been very vertical ever since we got a decent CPI and Trump's inauguration. The market's been very vertical, pumping so hard without any sort of pullback so far. So it's very important to note that we are due for that. So please be very, very careful. But I will talk more about these levels and very key zones to watch for as time goes on. But just know I want to talk about the news first. So on Friday, we had a very interesting day. We saw some big tech stocks in the red. If you look at like Tesla, it was in the red. So was Nvidia and Microsoft. But then we saw Aapl that was pretty flat, with the Google and Meta being in the green. So very mixed day. Some tech stocks were red, some were green, some sectors were flat, some were more red. So it was all over the place, very, very mixed markets, with most tickers being quite flat. Now, heading into the week, just know that it's going to be very wild. As a reminder, Monday is going to be tomorrow, January 27th. At 10 o'clock a.m. Eastern Standard Time, we have new home sales coming out. Then we have some manufacturing numbers at 10:30 a.m. There might be some volatility at those times, so watch and see if that ends up being the case. Besides that, there's nothing else that's too significant that's coming out for Monday. And then just as a reminder, Tuesday just has some Richmond Fed data at 10 a.m. And then on Wednesday, we have the notorious FOMC meeting with Jerome Powell giving a speech. Now, the market expects a 99% chance that the Fed is going to keep rates the same. There's a 99.5% chance they will. And when the market prices in things like this, most likely that's what the Fed will end up doing. So because this is what the market is pricing in, the Fed will most likely keep rates the same, in my opinion. However, what's going to matter then at that point is going to be the Fed's projections and what Jerome Powell tells us about the economy, what he says about inflation, what he expects about the Fed's future monetary policy. That's going to be extremely important for the way things end up developing, so please keep that in mind as time goes on. Now, for other factors out there, I just want to mention that we have, we have some earnings coming out. We have SoFi, many other banks announcing earnings on Monday, not to mention communications like AT&T. And besides that, there's nothing else that's too significant that's coming out for Monday, but get ready for that. On Tuesday, we have Boeing and GM. And then on Wednesday, we have like Tesla and lots of big tech stocks, Tesla, Meta, Microsoft, and the others. And then on Thursday, that's when we have Aapl announcing their earnings as well. So make sure you guys are ready for this just to be safe. That's going to be very important, especially big tech earnings starting on Wednesday. But just for tomorrow, we have SoFi, AT&T, and a couple more that are coming out, a couple more banks. So just keep that in mind. The last thing I want to mention is this. The market is quite neutral right now. It's in the middle. There are some buyers and some sellers simultaneously, but if anything, we've been seeing a lot more of puts being closed. I want to mention that momentum is quite neutral. We saw the market dump quite a bit before it got a big bounce. We went from being very fearful to very, very neutral, so we'll see how this continues. And then I want to add on that the put to call option ratio is at extreme greed. Now, typically, when it hits extremes, that's when the market's about to form a top or a bottom. Extreme greed typically signals that there's a top that's forming very soon. Not always guaranteed, but that's typically what that indicator suggests. And then volatility, right now the VIX is at neutral. We're going to be watching to see if this could reclaim its 50 daily moving average or not. That's going to be very key for what this thing ends up doing. So just keep that in mind as well. So what is my opinion about the markets? What do I think is going to happen with these charts? Let's just focus on the charts and nothing else from this point on. So I want to mention that as far as the way the market has been moving, there is weakness developing up here because SPY is struggling to break past resistance. If I go into our 4-hour time frame, okay, if we end up losing, just hypothetically, the 606 area, if we end up losing that, we hold below that, we're going to likely start dumping to about 603 to fill that gap. So keep that in mind, guys. There's going to be a big move down if we lose 606. If we end up bouncing and we get back above 608 and we try to break past 610, then yes, I'm going to be looking for 612.5 and 615 as our targets. So keep those levels in mind. Break 610, we're more bullish. Lose 606, I would turn a lot more bearish, and I'd be expecting that gap fill below. Now, we have this rejection that formed at least on the 4-hour time frame. That's the first thing that's worth mentioning. And then when you look at, for instance, the daily chart, you will see that SPY is rejecting off that 610 area. It's just barely holding on. And we have a lot of gaps, okay? There's a lot of gaps down here to fill. I would like to see SPY start to come down to fill at least some of these gaps, and I find that to be the most likely possibility looking at this bearish divergence. But just to be safe, watch your levels. So I wouldn't be surprised if SPY pumps tomorrow morning, back up to about 609 or so, comes back down, just kind of shuffles like this. But as time goes on, whether it's after FOMC or before FOMC, we might be coming down to fill at least one or two of these gaps, and I find that to be very probable looking at the current setup. So I wouldn't be surprised if we see a small dip within the next 1 to 2 days to fill that first gap, if not the second one. If that support at 602 does not hold us, then I'd be looking for like 597. But I think that we are going to be coming down at the very least to fill this gap down here. Unless we break 610 to remain bullish, I'm favoring downside a little bit more. I also say that because when you look at the QQQ, we haven't made much progress for the past 3 days. We've been stuck between 530 and 533 for 3 days, going back and forth, back and forth. We're struggling to break past 533, and we got a red day on Friday. We got a rejection off of that. We closed below 530, which is not the best of signs. So on the daily chart, you guys can see we have this big gap to fill at 524. We need to break past 533 to 535 to remain bullish. If we break 533, look for an attempt to push higher. If we can't, I expect us to do something like this where we shuffle for a bit, then eventually we come back down to fill this gap and we start dipping to the downside. I find that to be the most likely possibility. If we break 533, yes, we could be bullish. It's always a possibility, but I find that to be less probable. I think what's more likely is that we shuffle a bit and we might be coming down to fill that gap. So if we end up losing, just hypothetically, the 528s, I expect us to fill that gap to about the 524s. So keep that in mind, guys. That's the most likely case for the triple Q. For the Russell 2000, we're shuffling on the daily chart. We've been stuck between 230 and 226 going back and forth and back and forth. But keep in mind, there's that gap to fill all the way down here in the 224 area and another big gap down here. Now, you could also argue that when you zoom out and look at the weekly charts, the Russell has this giant cup and handle like structure. So we're in the handle right now. We're kind of dipping right over here. We could dip a little bit more before it tries to bounce. So that is what could be going on, at least for like the more longer term. But for the short term, there could be a small dip because of the fact that we closed very flat and because we're really struggling to get that break above 230. Now, if we break 230, I'm looking for essentially 233. And if we end up losing 227, I'm looking for a dip all the way down to the lower 220s. Right now, the daily looks indecisive, and we do favor a move back down to about 227. And then the daily chart, I'm sorry, that's the 4 hour that suggests that. The daily chart is showing us that this might dip just a bit to about 226 to 225. I anticipate it might dip a little bit. We might get a small little pullback before this thing maybe bounces later on. But look for some downside as a strong possibility. Now, ES is in the chop zone. Okay, we have this resistance at 61, the 6160s. Then we have this support over here around the 6120s. Historically, we go back and forth in this range before it rejects. We came very close to the all-time high on ES, but notice this gap down here. We still have this 6,080 area as a key level. So I wouldn't be surprised if we do something like this where we kind of like shuffle and then we eventually start coming down to fill this gap. We may even dip lower depending on FOMC and factors like that, but I do anticipate there's going to be somewhat of a pullback coming. Looking at NQ, we have a bigger, there's another gap all the way down here. I want to say that we tried to break structure, but noticed that we were not able to hold above 22,000. If we hold above 22,000, it is possible we try to go higher, but that's not as probable depending on different factors. What I anticipate is going to be more healthy is that if we struggle to hold 22,000, we might be looking for a retracement to about 21,700. Then we'll see if we get a bounce or not. But for now, that's what I'm anticipating as the most likely possibility. For Bitcoin, we're just consolidating right here. I think we just continue to consolidate for the time being. There might be a little retest of 101,438 before it tries to bounce, but I think we just consolidate in this range until we see a big move in one of these directions. We're just in a consolidation phase. We've been like this for the past 2 weeks, so keep that in mind. Now, one thing that could slow the market down is Nvidia. Now, Nvidia has this gap to fill and has this bearish engulfing candlestick right over here. So I wouldn't be surprised if Nvidia does something like this, where we start off on a strong end like this. We start off with like a little push, and as time goes on, we slowly start dipping to fill these gaps, and we see a move back down to about 140 to 138 as the most likely possibility. So I favor that a lot more. I think it's very likely we're going to see a move like that. So please keep that in mind, guys. That's going to be very likely for the way that this continues. So not saying it's the end of the world or anything like that. This could just be like a temporary dip coming to Nvidia because of this bearish engulfing candle and the fact that we're looking weaker on the daily. When you zoom out of Nvidia, it's range bound. It's going back and forth, back and forth, back and forth. So in this case, we came very close to our resistance near the 150 area, only to reject back down. We could pop a bit and start dipping back down to the lower supports, so keep that in mind. Now, Tesla has earnings for the week, but at least technically the daily looks a little bit weaker. And when you look at, I would say the most important time frame is the 4 hour, we're rejecting, right? We have not been able to reclaim this support. So look at the yellow trend line of resistance. We rejected, 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 rejected over and over and over again. So that's a sign of weakness. For Tesla to turn back up, you want to see it reclaim. First off, we have to get back above 413, and eventually back above this yellow trend line. If we break that, then yes, we will turn back to bullish. Just hypothetically, you want to see a move like this, break through this, get back above that like 415 area, then we're going to be looking for a bounce into the 420s. If we can't do that, and as of right now, every time we're hitting the yellow trend line, we reject over and over again, then we're going to be favoring a move like this where we kind of rebound a bit, maybe get close to our EMAs. Tesla loves to pop in the mornings to grab liquidity before it starts dipping. Then we could be dipping closer to about like the low 400s. I think that's the most likely case for Tesla. We kind of pop a bit and start dipping lower to fill this imbalance, and also because of the fact that we're on a downtrend, at least for the shorter term, right? This is just a short-term projection. My long-term projection, like I said earlier, is very, very bullish on Tesla. We're going to be running to the 500s by the end of the year. But for the short term, there could be some more downsides. Just keep that in mind. For Aapl, Apple's on a bit of a downtrend right now. We're going to be looking for a retest of that 220 to 221 area. I think we could dip a little bit more on Aapl, and then we'll have to see if we get some kind of bounce or not like this. So watch that very, very closely. It's trying to base at 220. If 220 fails, still we could be dipping lower, so keep that in mind. But I do see a test of the lower 220s just to be safe. Now, for the rest of these tickers, let's focus on them. We have Netflix. Netflix pumped very nicely. It's about $1,000 a share. Came down, made a lower high. So the question is, can we try to surpass that high, or are we about to fail? We tried to bounce here, but notice that we're struggling to break past 1,000. So there might be a little pullback. We pumped so hard after a very bullish earnings report, but it would be very healthy if we return back down to about 950, and we'll see if we bounce or not off of that. But I do anticipate a little bit of a dip here. This is going to align with our 20 EMA very nicely. So I think 950 is likely coming to Netflix. For MSTR, MicroStrategy is looking a little bit weaker. We got a big rejection. This is what I was talking about my video from Thursday. We were expecting this to pull back a bit, and that's exactly what happened. I wouldn't be surprised if this dips all the way down to about 340 to retest our 200 EMA. So tomorrow, we're going to be looking for like a pop like this, and then a continuation lower towards this support. So just keep that in mind, guys. There's a very, very strong possibility we see a move like that. For other tickers out there, we have Celsius. Celsius is trying to rebound just a bit, but it's not that strong. As you guys can see, there's a downtrend right here. We have buyers who are really trying to defend the 25 area. So I think what's going to happen is we're going to be testing 25.97 for a small push higher. A dip like this and a push higher to resistance. We'll see if we break past this or not. So keep that in mind. Might be a small bounce coming to test this previous support becoming resistance. Then we'll see if we get another rejection like that. So I'll be watching that very closely. Look for a small rebound and possibly rejection if we can't break this resistance. If we do break this resistance, we return to the 27s, but not a guarantee though. The trend is still a little bit more bearish, and the market as a whole could slow it down. Supermicro looks a little bit weaker, just like Nvidia. Just know that we're technically making lower highs right here, and we're in a range right here. Around the 36s, we tend to get rejected, but we like to get bought back up around the 30s. So I wouldn't be surprised if we see a bit of a pullback here to about the 32.95 to 32 area, like just like that. We'll see if we bounce off that or not, but then we could continue to dip lower because we have a double top here. So that could be favoring a rejection and move lower all the way down to the lower 30s as the most likely possibility. So please keep that in mind. Now, Palantir looks very bullish, guys. It's very bullish. We could be forming a cup and handle. So there could be a temporary dip looking at the 4 hour. I would like to see this dip just a bit towards like the 76 area near the 20 EMA. And then as time goes on, we need to try to hold 73.8 at the very least. If we lose that, then yes, this could develop into like a bigger dip. But even if we do get a bigger dip, we could eventually just make a full-on recovery to form an inverse head and shoulders / cup and handle. But there could be a temporary dip to about 76 before it tries to get a big bounce later on. So I hope that's as clear as possible. It's a bullish chart for the longer term. For the short term, it's looking a little bearish. So just keep that in mind. For Rivian, we're trying to rebound a bit here. There is weakness on Rivian because we're making lower highs over and over again. We also broke this low right here, so it's another sign of weakness. Now, it's struggling to hold above 13.14. It is possible that this thing tries to rebound towards our 20 EMA, then rejects like this, but it's going to likely just consolidate for a bit before we see a big move. We're going to be waiting for earnings and other factors like that, but as of right now, it's on a bit of a downtrend. The trend is a bit more bearish, as you guys can see like this, so just be careful. There's also the possibility of a head and shoulders. This is like a left shoulder, a head and then a right shoulder. So I'm a little concerned about that. That's why this is technically favoring downside. Unless we reclaim like 13.5, we are favoring downside. So we need to get back above 13.5 to turn bullish. Otherwise, I think this may continue to dip. For SoFi, we have a bearish divergence double top here. This has earnings, so we'll see if earnings cause this thing to pump or dump. If we get a bad earnings, this is going to be dumping back down to the 17s. It does look like it might dip just a bit, maybe during the pre-market, but then after earnings come out, will it rally back up into the 18.5 plus area, or does this thing end up rejecting? We'll have to see depending on how earnings goes, so just wait for that. For AMD, a little bit of weakness is being shown here. We're just consolidating so far. There's a possible double top here, but just know that we could end up doing it something like this where we pop and start dipping towards like 122. We'll see if we get a big bounce or rejection. So if we lose 122, there's going to be a dump to about the 120 area. If we hold this, we could attempt to rebound. So just be careful, guys. There could be a double top here, which could be suggesting downside. It's very probable, so just keep that in mind. For others out there, we have ARM. ARM is barely holding support. We got to hold support at 162. We got to hold that. If it holds this, we could bounce and try to get back up to that gap fill. If we don't hold this and we reject, it is showing weakness here. If we end up losing 162, we're looking for a dip all the way down to 153 as the most likely possibility. So it might rebound a bit, but if it ends up losing 162, I'm looking for a dip. It's showing a little bit of weakness. Coinbase, this is like kind of in the middle, just like Bitcoin. I wouldn't be surprised if this dips a little bit more after getting this big rejection here. So it might make a move down to about 292 or below. Then we'll see if we get a big bounce or not off of that. But just know that this might dip a little bit more from here. So give this the time it needs. So I'm looking for 292, and we'll see what kind of reaction we get. For Amazon, we're also consolidating up here. Now, Amazon's doing a good job at holding up, but it's in a range right here. Near 235-ish, we tend to reject, and we like to get bought back up around 230, just under 233. So if we're bearish, you want to see this thing lose 233, then this thing is going to dump all the way down to 230. If we're bullish, you want to see this thing break past 235. If we hold above that, we're going to be pushing for 238. For the last couple of days, this is all it's doing. It's going back and forth, stuck in this range pretty much. This is all Amazon is doing for now. So we'll see if we get a breakout or not, which way we break. It's just waiting for earnings. So just keep that in mind. It's just consolidating. Meta is bullish, making higher highs and higher lows. It pumped very, very, very nicely so far. But we'll see if we could break 650 or not to remain bullish. And it's going to be a tough resistance. So if we break 650, this thing is going to likely continue to push all the way up towards 655 to 660. If we can't hold above 660, we're looking for a dip back down towards 635. So watch and see. Can we hold above 650 to remain bullish? If we can't, we could retrace to about 635 before it tries to bounce again. But nonetheless, the chart looks very bullish looking at the current setup. Okay, so keep that in mind. Microsoft is showing a little bit of weakness. We're going to be watching to see how earnings goes, but this is favoring that it might be returning to the support around 440 flat. It got a little rejection here, so I think 440 could be coming. It's also worth mentioning that Microsoft has this giant gap down here around 430. So I think that 440 is likely coming. We'll see if we bounce off that or not. If we can't hold 440, there's going to be a risk of us coming down to fill that gap towards 430. So be careful with Microsoft. Google, on the other hand, looks more bullish. It's holding its 20 EMA very nicely. There are gaps to fill below, but there's no sign of rejection yet. I want to see it lose 195 to turn bearish. As long as we're above 195, we technically favor that we want to go up a little bit higher. So it's still bullish. This still looks stronger than Microsoft and the other big tech stocks. So this could be going for about 205 plus if we break 202. I need to see it lose 195 to turn bearish, so make sure you watch that level just to be safe. For GameStop, we're making lower highs here, rejecting off our 50 EMA. This could be favoring a move back down to about 27 flat. It's very flat, though, so it might not be a big move. AMC is also rejecting. It's very much just consolidating. I think it just continues to consolidate around the low threes. It's not really doing anything too significant. DJT is rejecting. There's going to be a risk of this returning back down to 31.5, so keep that in mind, guys. Might be a small dip on DJT. The VIX is... Technically, it's been dumping quite a bit, but we're going to be watching to see if the support at 14 flat holds us. Will the VIX get a big bounce off 14 or not? We'll be watching that going into the week. This could be heavily dictated by the Feds. Just keep that in mind. I also want to mention that I'm not seeing too many gaps on this, but you could argue that the VIX has a possible wedge forming here. These aren't always guaranteed, but it's always a possibility. So we'll see. Does the VIX get some kind of breakout? Is this a sign the market's about to form a top very soon, get a temporary pullback if the VIX gets like a breakout from here? So we'll see about that. There is a possible falling wedge on it. So that could be another confluence for a signal that the market's about to see some downside. So we'll see about that. Not always a guarantee, but it's something that's worth mentioning. I would just say to be kind of like careful with this new setup. For the 10-year, okay, our yields are going to be making a big move depending on what Jerome Powell and the Fed say. There could be a head and shoulders on the 10 years, so we'll see how that affects things, but we'll see. We have to wait and see what Jerome Powell has to say. Same thing with the dollar. There is weakness on here, but we're barely holding 107.43. If this holds, it could try to bounce a bit. If not, it could be dumping more. So we'll have to see about that as well. With that being said, guys, I want to thank you all so much for listening. Please have a great rest of your day. And just know that as far as the market goes, we're at some tough resistance and there are a lot of gaps to fill below. So the market does favor that there might be some downside coming. But whether or not we get a much larger move to the downside or a much bigger move to the upside is going to depend a lot on FOMC and other factors such as big tech earnings. Yes, I do favor downside a little bit more for us to fill these gaps, but we'll see just to be safe. With that being said, guys, I thank you all so much for listening. Please have a good rest of your weekend. Enjoy some football. I think we have the playoffs coming up very soon. So enjoy what life has to offer, and I'll see you guys very soon tomorrow morning before market open. Thank you for listening, and peace out.